just gone 11 o'clock on the 20th of May. Here we are. I'm in Cape Town. Mitch, where do I find you today?
In sunny but cold Joburg. Well,
Josie
four.
Town. Josie
Yeah,
Town.
down. That's it.
Well, we've had the usual four seasons in one week already here in Cape Town. But I'm delighted to be able to be on the call with you. We've been talking about this now for a month or two. And really, the purpose of this pilot episode of our financial talking, financial thinking podcast is to talk a bit about, on the one hand, your journey as a leading financial advisor in the investments game, and myself as really what the beneficiary of your advice, the advice that I've taken in terms of financial advice over 30 years, three decades of investing in small amounts, starting my work when I think my salary was probably no more than single digits, and now towards the back end of my career, when you're thinking, do I have enough? Do I have enough to be able
Mm,
to live the life? And that's really what this is about. And I think that's where the unique proposition of the podcast is that I'm the interested party. You're the financial advisor. You are the expert. And so before we get into some of the themes that we're going to cover in episodes to come, tell us a bit about yourself, Mitch. Tell us a bit about your journey into the world of finance and investment. And let's go right back to some of those interesting elements before this life of yours. Tell us a bit about yourself.
mm. Thanks, Pete. Yeah, so my journey started, well, it was always about following my late brother. Um, so we started out in restaurants. He pulled me in when I was 12 years old, and I had the privilege of working with him until I was old enough to be on the floor. And I stayed in restaurants till I was 24. And Joburg being Joburg, our restaurants kept getting robbed. So I had to look at other alternatives. So my brother, Walter, had joined the industry 4 years before that. And he kept saying to me, "You are built for this." I'm naturally analytical. I like the numbers. I like the path that it takes you upon. And my brother was convinced that this was the industry for me. So I left the restaurant industry, and I initially joined a company called Sage Life in 1999. That lasted about 6 months, really limited training. Liberty Life, the company that I joined right after that, was renowned for their in-depth training for financial planners. So I did a 5 months initial course, and then I started the journey. It was a very slow start for me. Uh, because of my analytical nature, I didn't want to move forward without understanding what needs to be done. So it took me about 3 years to get on my feet. But once I was on my feet, in actual fact, I had my first disability claim for a young father. And the proverbial penny dropped, how important it is to get good advice, and how important it is to have somebody that can walk alongside you and help you understand things that are maybe not necessarily easily to understand initially. So from the third year, things started to improve for me, mostly because I started to really understand what I was doing. I was understanding the need for intervention in a lot of people's lives to get certain things going. And once I started to build with people, that's when my practice started to grow. Fast forward 10 years into the industry, unfortunately, my brother passed. And you're all of a sudden on the other side of the table. Now have a close family member that now you need to deal with their estate, you need to help their widow, you need to help their children, and you need to make things last. And once there was another moment where the I started to grow, because you start to have real life insight into these concepts that you've maybe got a high level of theoretical understanding of, and the importance of it. The importance of having the correct structures in place when these life events happen. And then for the next 15 years, that guided me in my practice, focusing on the things that really matter with my clients, and also starting to understand that people have different circumstances, and how to apply what needs to be applied in that circumstance within reason. So you never want to implement something that nobody's going to follow through on. And that step-by-step process, working with people, I've really seen the results in the last 10 years. I've seen people being able to retire. Unfortunately, people passing, especially over the COVID time, from 220 to 224. I think I did 3 times the death and disability claims, obviously for obvious reasons, more than I'd done in my whole career. And so young and old alike, dealing with very difficult situations, but because the foundations were in place, because the contracts were in place, or the wills were in place, it doesn't take away the pain of death, but the planning absolutely makes things easier. That's for sure. And then we have clients like my friend Pete, where it's one of those easy clients where he's always willing to invest, always willing to understand first. He needs to understand first what is the plan, and then that plan is now showing such fruit in his life. So it's great to have clients like Pete, where you've been walking with him for decades, and now he's living in the fruit of that success. All those listening and implementing and sticking with a plan, and that's a game changer. So
I
that's
think
me
that's
in a
really,
nutshell.
I love it, Mitch, and that's exactly why I think that journey that you've been on, as you say, the practical hands-on, the stresses of running a restaurant. I also, my very first job here in South Africa was working in fruit and veg warehouse management, and I know
Sure.
how hard an industry that is.
Mm,
And then to pivot towards what Walter and your brother's gift, which was really around this financial planning and thinking, and then, as you say, the analytical side of your brain helping you to
mm,
adjust. Then the practical dimensions, the tragic loss of your brother, which is still felt for all of us who had his advice, and the way that you've carried that advice into the next 2 decades has been
mm,
remarkable. And that's why I wanted to have this podcast. I think there's quite a few podcasts out. I mean, I think Bruce Whitfield's been doing his things for many years.
forever.
But it was
Mm,
really saying, what I haven't heard necessarily is this idea of the advisor and the client having conversations. And the thing that struck me most in all of my career, my life in South Africa as a working as a professional, as a humble town planner, started out in Gauteng at the Fox Street, Joburg, Marshalltown,
mm,
was a conversation I had with one of my colleagues when he said, you're thinking about getting a mortgage for your house. The first place that my wife Ali and I were going to buy, as not even engaged at that stage, just that first sort of partnership moment. And him
mm,
sitting with me and said, "You know what it means when you start, put that extra 1,000 away in your mortgage? Do you know what that does in terms of a time frame of
mm,
reducing the payment?" And I was like, "No." I was still confused as to why I was being asked to pay extra money, or the value of my car, which I'd bought at that stage, was more than, in terms of the insurable value, I was paying more than what I'd paid for the car, and of course, it was because of the interest. I didn't understand interest on the car.
Mm,
I didn't understand that I was going to pay more in the short term. So when I started to see these equations of,
mm,
you're about to invest at that time significant amount of money, couple 100,000 rand, and you pay the extra thou per month. All of a sudden, a 20-year bond became a 13-year bond, and those
mm,
were life-changing thinking. Conversations with Walter around partnership at that stage, even as a non-engaged or legal couple, around the
mm,
investment strategy for us was really important. And I say, here we are, literally 3 decades on, 30 years. I'm celebrating my professional career, and now there are choices available to me, which is fantastic. And that's why this podcast is so important to me.
mm.
When you're setting out, Mitch, I mean, I'm guessing it's like, was it like the old Forrest Gump? Life is like a box of chocolates. I'm guessing that no client is the same. But
For sure.
what are the common, when somebody comes knocking at your door as a potential client, what are some of the scenarios that are unfolding for them, which you see more often than not?
Mm. So, in the life cycle of a financial planner, typically what happens is that your clients are between 10 years younger than you and 10 years older than you. Okay. So, not to say that, it happens all the time. And we have other partners in the firm that we've trained up that deal with the younger generation. Um, you get referrals from parents and grandparents and so on, people that you've been working with forever. And they say, look, we want our son or grandson, and we want him to start on that journey. So typically, we'd have somebody that is in the same life space as them working with that person. The thing with clients is that you'll find that, let's say it's you and Ellie and you're 30 years old. So when you're working with clients, everybody has a similar needs that need to be looked after, typically, unless you've got a trust fund. Uh, that's a different scenario and doesn't happen that often. So
There's
you'll.
a special episode for the Trustafarians, just for them, yeah.
I've only met one trust fund baby, and yeah, that's a very different life. But we can all dream, can't we? So yeah, so clients all have very similar needs, and you can approach your financial planning from that point of view. What really changes is uh, how that client's made up. You know, some clients like yourself, once you have made a decision and decided to stick with it, you stick with it. Then you have personalities that uh, will agree to something, and then it's difficult for them to stick to a plan. So the way you structure a plan for a client and how you look after a client is really how I've walked with them and seen how they behave in certain situations, and that is an important part of financial planning. So uh, okay, so that's an important part of financial planning, is understanding your client, so that when you are doing their planning and you are looking after them and you're walking them through circumstances, that they stick to the plan. Um, a big one is, I know, for instance, in retirement, I know exactly what asset allocation to put, which would be optimal for a client. Optimal amount of income that needs to draw, how much and how long, to extend the probability of their capital outliving them and not the other way around. However, you got to understand that if the markets dip 30%, uh, a, a, more than 50% of clients will most probably withdraw from that plan.
Mm,
So
mm.
it's a really good example because I've had it with retired clients or even clients before retirement, where if they held that investment for the 10-year or 15-year term that we decided on, that would be the best outcome for them. But if
Yes,
they pull the plug halfway through, and it's always the worst possible time, they pull the plug, uh, then all is lost, so to speak. The whole plan's
understood.
out the window. So you've got to understand that client. You've got to build a sense uh, how your client will react when things are really bad, and how you can help manage them, help manage their emotions to stick
Sure.
to a plan. Yeah. So yeah, that's insight into financial planning is a big part of it. Insight into
I'm
the client at least.
I'm sure we're going to get into some of, in future episodes around, what happens when it goes wrong.
Mm,
What are the things that can go wrong, and how to mitigate against that or plan for that, and some of the
sure,
lessons that
sure.
you've learned. So I mean, that's going to be something I'm looking forward to. I want us to take us sort of to this the, a global picture, Mitch, which is that get the sense that it's a very precarious situation globally. We know there's conflicts across the world, which are impacting on everything from the price of fuel to our moral compass, if you want to call it that, in terms of
Sure.
who do I
Sure.
invest with. And I know that the idea of making sure that even in terms of the bundle of shares or investments that are being made, it's like I want to be making sure that it's not some company that's a rogue in relation to its trading patterns or whatever it may be. I'm also seeing that I think it was the UK. It was saying that it's 12 million people don't have enough money for their savings. It was some headline. What is it we're getting wrong globally? And we'll get to South Africa just now because I'm sure there's certain experiences, both as somebody who's come through the South African education system in your case, and now working in it. But let's look at the global picture first. What is it that we just don't seem to be able to get right in terms of I'm going to call it financial literacy,
You're right.
and something more broad than that. And then please think about your experiences in the South African space.
Yeah, I think that coins it. It's financial literacy, understanding how important all of these things are. Just going back to your first example on debt, um, we I see it in my teenage kids. Um, the concept of putting money away for 30 years ago is something that needs to be learned. So um, having something in your hand versus having a concept that is 30 years from now is a very difficult thing to grasp. So typically what happens, and it's a worldwide issue. So in South Africa, it's more pronounced because we have such poverty in South Africa,
Mm.
income equality, inequality at least. But it's not a local problem. It's a worldwide problem, and it's a question that gets asked all the time. Why is financial literacy not taught in school?
100%.
Why is a simple thing like doing your taxes properly not taught at school? So all of these things, yeah, it needs to be taught. And then uh, I have found that it takes a year or two or three before the penny will drop, and then you are able to implement that type of advice once people start to understand. I I got caught in my 30s. I went and bought a fancy car, and tires will bankrupt you. And
Did it have a go faster stripe as well?
say again.
Did it have
What
a
did you?
go faster stripe? Did you pay for the extra,
Ah, yes,
the
of
trim?
course. The gold inlay, you mean? Yes, of course. So we all get we're susceptible to these things.
Mm.
And the clients that I work closest with use me as a sounding board. And I say to my clients all the time, and I mean, you've heard me say this, I'm really not here to tell you what to do, but I am
Right.
here to show you the detail and guide you on a path which is the most beneficial for you. And usually that path is not to be totally disciplined, but to have some leeway that you're looking after yourself in the present, but also making sure that your future is also looked after. So that is the process that you need to follow. I think in life in general, but having somebody walk alongside you uh, and help and using that person as a sounding board um, makes a huge difference in a lot of people's lives.
So you're talking there about, I guess, the concept of a partnership, right? In terms of
Right.
a trusted partnership, and again, we'll get to when it goes wrong, but I think on the flip side of it, when it works, then I think, and again, that's why we're having this conversation,
Mm.
is that there's benefits, and I think that some of these elements of the financial literacy, and I'm just looking here at the notes that we made prior to this. Some of the things we're going to talk about in future episodes are going to be around, the value of money, as in,
Yeah.
what the rand is when I started working in 1996 versus what it is today. Two different worlds, not only in terms of its own value against itself, in terms of its inflationary value, but if I think about when I first came from the United Kingdom, it was 5 rand to the pound back in
Wow.
1994. And now I think it's
Wow.
what, 22, something like that. So the
Mm.
relativity of time, and what 100 rand is today versus what it's worth in 10 years' time. Compound interest. This was another thing that sort of blows your mind if you start to understand it. Of if you're paying compound interest through a debt like a mortgage, the car that you
Yes.
talked about, it'll hurt you. But if it starts to pay you because you're debt, quote unquote, debt free,
Mm.
that's an inverse relationship which has huge benefits uh, when you're in that position. So if you can get that financial discipline to get to the other side of the equation, first of all, what is that equation? How does it work? How do you even get there? The basics of saving, when to start, what to invest in, what the profile of that. This is going to be a conversation with each individual client, but there must be certain parameters.
Mm.
Trusting,
Absolutely.
trusting advisors, the fine print. That's one of the episodes I really want to go into is,
I look forward to
what is
that.
in that fine print of pages and pages? Like, why is it there? Who's it protecting? What does it hide in terms of fees, penalties, obligations? I think that would be a really interesting and sort of honest conversation to understand and to put people's minds at rest, and how ultimately it protects both parties
Mm.
in the long term.
Yeah, absolutely.
Setting goals, goal setting, how, what are short, medium, long term investment goals? Onshore versus offshore. Clearly in South Africa, that's one of the biggest conversations is, around the how much can I take offshore because I want to put something in a quote unquote uh, strong
Hard currency.
currency, hard currency, a dollar. But I mean,
Mm.
even we've seen the pound be taking a hammering. And then, of course, the future of finance, Bitcoin, all of this fancy stuff that I'm personally not interested in. But hey, I think it's me who's maybe the sucker because I'm not understanding it. I don't want to understand it, but it certainly seems to be where we're going. So these are some of the things that, if you're watching this, you'd like to, this is the outline that Mitchell and I have put for us to discuss. But before we conclude and wrap up this introductory episode, Mitch, I think one thing that you've done or haven't done yet is really just tell us a bit more about yourself as this financial advisor. You work for Liberty, the achievements that you've had, your bona fides, and this is where I'm asking you to brag a bit in terms of who you are. That you're not just Mitch who works for Lib Life. I think you've got a lot that you can be very proud of in terms of your career, and perhaps this is the opportunity to frame the conversations that we're going into.
Thanks, Peter. I often don't talk about this. I don't know if you know, but 2 weeks ago, I got a Lifetime Achievement Award from Liberty.
Didn't know that.
Um,
You kept that quiet.
yeah, I don't often talk about my achievements,
Well done.
but
Congrats, man.
Thank you. It's an international quality award. So it comes from the States. Liberty awards it as a VIP 5 stars, but
Congrats.
it translates from having certain categories that are excellent throughout your career for at least 20 years for you to be able to be awarded with that. So, and that comes down to planning with your clients, never having complaints, and so on and so on and so on. And then when I was 36, I did my postgrad in financial planning, and I have what they call a CFP designation, which is also an international degree. It's it's a certified financial planner. So in the episode where you want to talk about how each client is looked after, I'm going to go through the fiduciary duty I have as a CFP to treat my clients fairly,
Understood.
to put my clients' needs first before anything else. And then how do you have I think the right word is symbiotic relationship with your
Mm.
client, so that you are paid fairly for what you do as you go through the process with your client. So it'll be I think that'll be a really nice episode dealing with that. And I just want to say one thing. When you are working with a financial planner, you you want somebody that is able to see what details that the details that actually matter, because the details that matter and are implemented correctly in 10, 15 years time make a world of difference. So
100%.
when we're dealing with investing and when we're dealing with compound interest, that's going to be quite an eye opener, seeing the details that we've put in over the years and what are the outcomes. Okay.
Fantastic. The one thing I wanted to first things first, congrats on the Lifetime Achievement Award. That
Oh,
is really
thanks.
special, and you must be very, very proud, and I'm sure your family must be extraordinarily proud of that achievement. The
Thank you.
the one thing that we haven't yet sort of tidied up, and it's going to be something we'll need to pull together for future episodes, is just some sort of disclaimer around, this is not a podcast that's necessarily giving advice. It may be talking
Yes.
about different opportunities and things that can be discussed. But is there anything from, again, a professional disclaimer that you want to state at this stage, on this pilot episode?
Yeah. So absolutely, because this is a very broad conversation, and advice is about understanding each individual and their circumstances before you give advice. So this is a very broad conversation on the concept of giving advice. So that must be understood in this podcast. And obviously, if you want individual advice, then we need to meet and go through your personal circumstances, so that advice that is given is tailored to your specific situation.
Where, if people want to reach out to you, Mitch, would people be able to get hold of you at this stage through this podcast platform?
So we have a website that's called insightadvice.co.za. It has all our details on there. Alternatively, we can maybe put my email address in the comments below.
100%. So just to confirm, it's not one of these fancy insight with a Y. It's INSIGHT, insight at
It's insightadvice.co.za.
advice.co.za. Thank you.
Yeah,
We'll put that up.
yeah.
Mitchell, I think that brings us to the conclusion. We've been talking for just on half an hour, and I think this was really what it was about, was to give the viewers, the listeners, a chance to at least understand who you are, why we've decided to put this little partnership podcast together to try and share some of the experiences and the lessons learned from the client's perspective, with the benefit of an advisor like yourself to give us some of the hard truths, as well as some of the things that don't get talked about as much as possibly they should when
That's
clients
true.
and or advisors are having those conversations.
Mm.
Thank you so much for your time today. Very grateful for you and the help that you've given over many, many years. But most importantly, really excited, really looking forward to our next episodes. So, in the meantime, look after yourself. Good luck with everything there up in the good place of Josietown, and look forward to seeing you soon.
Thanks, Pete. Thanks for all of this. I'll see you soon.